right, so next up, we're gonna have our first set of exciting demos. I can't wait to see this presentation. I need to come down there. So first up is gonna be Folio Financial. Everyone, please welcome Dave Hagan and Andrew Koslow to the stage.
Hi, everybody. My name's Andy Koslow, and I'm Folio's EVP of Strategic Development. Dave Hagan, who heads our digital wealth platform and all the efforts surrounding that. So I'll give you a brief introduction on Folio, which is a wealth tech firm that was founded 20 years ago by a former SEC commissioner to do the right thing by investors and the advisors that serve them. And today we're going to demo our latest and greatest platform, our digital wealth platform, which is designed to essentially serve hybrid investing. And we're going to talk a little bit about what that means. But before we start the demo, I want to give you a little bit of setup about why a digital wealth platform is important today, given the pressures that the industry is under. So first, 21% of wealth clients, end clients today, were born after 1965. 37% of the top quartile of advisors were also born after 65. And 45% of today's investors view tailored digital advice as important, and 56% of investors view robo-advice as a key differentiator when receiving advice. So when you think about the challenges that our industry is facing, pricing competition, the advent of new technology, other competitive factors, it's critical to think, how are you going to combat those? And a digital wealth platform that's well thought out can be the tool to do that. So if you want to win younger clients and new clients of the younger generations, you have to focus on being digital first, but also hybrid. And what do I mean by hybrid? So hybrid, I mean, you want to be able to allow the advisor to play along, either have to provide advice in complicated situations when dealing with a trust or an estate or that type of thing, but also to allow for automation and for the client to deal directly as necessary. And also important for this client base is the ability to take advantage of the new wave in investing, which is essentially direct indexing. Historically, we've moved from more active type of investing to passive index investing. The newest wave today is direct indexing, where you actually own the underlying investments that mirror the index and can overlay other factors to make your investing results more positive. But you also want to attract this client base by enabling socially responsible investing and ESG factors. Those are very important factors to today's audience. And lastly, you want to make sure that this investor base and the advisors that serve them are able to manage taxes in an automated and comprehensive way. So with that said, we'll give it over to Dave to show you how some of these principles, which are important to today's advisors, today's clients, and the younger generations coming up, how we can address that.
Perfect. Thanks, Andy. Excited to be here to demo Folio's latest innovation. So Folio's been around for a little over 20 years, for those who aren't familiar. Our latest technology leverages Folio's brokerage, clearing, and custody capabilities. It's built on top of a suite of about 240 different APIs, probably one of the largest suites of APIs in the industry, everything from core clearing and custody, trading, account management, member management, all the way through to a whole new suite of digital advice capabilities. What I'll show you here in just a few clicks is the ability for whether it's financial advisors or enterprises, banks, broker-dealers, lenders, anybody, any firm who's looking to really establish or grow their digital presence, to be able to leverage our platform from a completely white label capability and leverage everything from a direct-to-consumer robo and launch a new channel to, as Andy mentioned, more of a hybrid bionic advisor, so extending the capabilities of the advisors out in the field and allowing for more collaboration and really more personalization as it relates to building and constructing investment strategies as well. So just in a few clicks here. Technical difficulties, just cut into our time. I'm just kidding. Come on. I'm good. All right, perfect. All right, so just in a few clicks here, I'm going to go through and basically walk through a highly personalized portfolio creation process. So the platform itself is highly configurable, so everything from the look and feel, fonts, colors, all the way through to the underlying methodology that feeds the actual algorithm itself. There's about 80 or so inputs that drive the algorithm. In addition, the platform itself can support not only one investment program, but multiple investment programs. Everything from custom equity bespoke portfolio creation to third-party models, so more of a robo-TAMP type structure, to what you would envision as more of a wrap program, so we can support everything from stocks, ETFs, mutual funds, third-party models, alternative investments, or any combination. And as part of that investment program, it's really up to the firm to define those investment strategies and how the portfolios are being constructed. So I'm going to walk through actually creating a custom bespoke equity-based portfolio from the start. So everything in the system is goal-based. We have 4 core goals out of the box: retirement, major purchase, education, build wealth. All of these are highly configurable, so the questions that are asked to set up the goals can be modified by the particular firm. So I'm just going to put in some basic inputs here around retirement. So how old am I? When do I want to retire? We can plan at the individual or household level. So some basic inputs to set up the goal. We're going to do some calculations, in particular around things that are pretty tough for an advisor or even an investor to understand, particularly retirement income. How much am I going to need when I actually retire? So using things like US Census Bureau data, labor statistics to drive those calculations. There's a whole host of interactivity here, so if there is an advisor involved, they can use things like co-browsing or interactive tools to work with their clients. But we're going to do some basic calculations here around retirement savings. So based on this goal, the retirement savings of $2 million, my 41.6 a year in retirement income, and some basic calculations around monthly contribution to start the particular goal. Underneath the hood, there's a whole host of configurations that the firm can control, everything from the risk-free rate of return to inflation rates to savings growth rate that drive a lot of these calculations. So again, it's highly configurable for the particular firm. We're going to ask some questions around risk. So these questions can be modified, but essentially we're building a risk profile behind the scenes. Everything is scored here. So again, I'm just going to answer some basic questions, particularly around market conditions and how this investor may identify between risk and reward, incorporating things like Monte Carlo analysis to show projected portfolio values over time at different risk points. So in this case, I can go everything from very conservative through very aggressive and show what those portfolio values could look like over time, in particular this 40-year goal. I can even overlay a market crash of 2008 to show sort of the impact of market volatility at different risk levels. I'm going to just select here moderate aggressive, and we'll kind of move on. Typically, that's where most digital advice robo-advisors stop. A little bit about the goal, a little bit about risk, and then we're going to get you very quickly to a prepackaged, whether it's ETF or mutual fund-based model. But in this case, as I said, we're building an equity-based portfolio from the ground up. So we're going to add an extra level of personalization to this. So in particular, as Andy mentioned, around things like direct indexing, being able to overlay SRI, ESG preferences. We're going to ask some basic questions here around employment. So as we're building this particular portfolio, let's say I work at a public company and maybe my spouse works at a privately owned company. Let's collect that here so we don't create any sort of overexposure as it relates to any one particular company or a sector in the marketplace. So perhaps I work at Apple, maybe my spouse works in the aerospace industry. Next level of personalization is around net worth. So heavy concentrations of either an individual stock, maybe a private business or real estate. I'll say in this case an individual stock. Perhaps I worked at GE for 20 years. Based on the market, I definitely don't want any GE in my particular portfolio. Again, let's not overlay that here. And then the third leg of personalization is truly where we see, particularly from a folio perspective, a lot of interest and a lot of where the market is going in regards to allowing investors to put their money where they think it matters most. So being to not only to exclude categories, things like fossil fuel, factory farming, but also being able to include those in your particular portfolio. So truly being able to give the investor the ability to put their money where they believe it matters around social preferences and impact investing. So I'm just going to tick off a couple here. So let's exclude animal testing. Perhaps we'll include positive waste management and solar. Let's see, some of the sin socks, gambling, and tobacco we'll take out of there. And behind the scenes, we're constructing this particular portfolio based on these inputs. So last step here, because we do things like, and because we are the clearing and custody provider, and we do things like fractional share trading and dollar-based investing, as I'm building this particular portfolio, I can include a slice of, say, Berkshire Hathaway in here. And I truly have the ability to include or exclude any particular companies or stocks as part of this, and maybe I want to carry my social investing through, so Bayer, which is an ADR, tradable on our platform, which is the parent company of Monsanto, carry that through. And essentially, in about 7 steps now, I've taken all of those inputs to set up the goal, gather my clients' particular personal preferences around their needs and wants and impact desires, and we're basically building a portfolio from the ground up. So using things like Monte Carlo analysis, we're going to give a probability of actually reaching this particular goal. Down here below is the actual Monte Carlo chart itself, but in this case, we're running the projections using the actual recommended portfolio, so you can see particularly how this portfolio will perform in different market conditions, strong, average, weak. I can also, we have a built-in solver here, so in the case of an advisor working with their client, they can talk about different trade-offs with their clients. So in particular, what if you deferred retirement 2 years? What does that do to your chance of success? You would hope it goes up from that 76% to, let's see here, probably about 89, 90%. There it goes. So my chance of success just by deferring retirement for 2 years, it's an extremely powerful tool for an advisor. This can also be driven on the consumer side, and we have a very simplified version of that as well. But essentially down below, once I'm ready with my plan inputs, I'm going to regenerate that portfolio if I hadn't made any changes. And from the ground up, we've essentially built an equity-based, highly customized, almost institutional quality portfolio here. So you can see at the asset class level, again, all of these are firm driven. So the firm can dictate the asset classes. They can dictate the upper and lower bounds on the particular asset classes. But here at any one of these individual slices, you can actually see the tickers that are being recommended. There's my slice of Berkshire Hathaway. In this case, Berkshire was going to be included in the portfolio at the mega cap level, but because I've decided to include it, we actually are overweighting Berkshire just in this one particular slice of the portfolio. Extremely powerful from a personalization perspective. You can see any exclusions or preferences that were applied, and then down below is just essentially a summary of all of those inputs that we gathered along the way. Any exclusions, there's my positive waste management. Any exclusions, I can always go back and modify those. If there is an advisor involved, I can generate an investor policy statement at this point. Everything we do from a Folio perspective is digital first. So all of our account opening is online, real time. Everything from statements, tax documents, even proxy voting is all online as well. So again, that's been kind of our mantra for 20 years, is to inject not only automation into the process, but also to remove paper as part of the client engagement as well.
All right, so we hope you like what we showed you, and if you have further interest, please come and stop by and see us at Table F, and thank you very much.
Thank you very much.